You've raised, I believe, what, a little bit over 18 million from some pretty awesome investors.
Yeah.
So, what has the fundraising journey been like, and what are your key fundraising learnings?
It's kind of a big question, because I think it just really depends on who you are, what you're building, what round you're raising, et cetera. We raised our first round in 2021 when the markets were very different. Um, People were clamoring to get into our round, and we had to say no to a lot of investors. That was the best fundraising experience ever. I was like, this is easy. Like it wasn't easy, but like it was so much easier than it became. And then we raised our next round in 2022, and then the following round at the end of 2023 in our Series A. And they just got like progressively harder and harder as the markets shifted to be a lot more investor friendly. And so back in 2021, we were and still mostly today, the pre-seed round is largely just about team vision and like initial proof points, like very, very initial. And you can raise a pre-seed round. And then things get progressively harder, right? So when we raised our last Series A, it was um, largely about proving like our payback periods for our sales team, looking at our P&L and our margins and like our cohort analysis. And like the beginnings of a scalable sales strategy and things like that. Um, so I mean that's super broad. I don't know, Mike, how detailed you want to get. I can get into more detail there about like I mean tips and things like that. But
It might actually be helpful to share like a few tips for those at like the earlier stages. So maybe like the kind of
okay,
pre-seed stages.
yeah. So well, I mean, for me, it was I was fortunate enough to have an amazing co-founder, and so like really building out your team and selling your team is so important. And uh, for actually in every round, I think of it as like points you're getting. If you don't have points in something, then you need to like get as many points as possible in the other things. And so if you don't have a co-founder and you don't have like this amazing built out team, then you need to make up for those points in the idea itself, in the market, in your expertise in somewhere to balance it out. And so like with our last round, we didn't really have enough points in like the revenue bucket. We were a little shy of where like a really strong Series A founders were raising. And so we had to push and get as many points as possible in our like pipeline, and in our growth for the last 12 months and where we expect that to grow. And so those are the things that we'd emphasize. Um, and I also have a differing belief than a lot of founders about fundraising when it comes to like building relationships with investors. And it depends on your ability to come out the gate fully formed and build an investor pipeline list. But my advice is actually usually build an investor CRM of like 70 investors that you think are perfect for your startup at your stage in your category, in your geography, et cetera. And there's so many ways to do that. I mean, PitchBook and Crunchbase and all these tools, and just looking at the investors of all of your competitors. And then finding ways to get warm intros to those people when it becomes time. But I actually don't believe in having many conversations before you fundraise. Like, I think it's a big distraction. I think it can do more harm than good because all the investors want is they want to track you and they want to track your growth, and they want to be first, your first call when you actually go in a fundraise. And so they have their agenda, which I think is very imbalanced with the founder's agenda. And so if you say, hey, we're going to 3x this year, like that's our growth. We're at this GMV right now. Like this is our market. And then a year later, you talk to them and you don't hit those goals, but you still grew a lot and you can still really tell a great story. It only does you damage than having that first conversation. Not to mention, you're not really ready to answer these hard hitting questions about competitors and market and things like that. Then versus when you come out fully formed, you've practiced, you got your pitch down, you know how to answer those questions, and you can build momentum very quickly. And so, like, it's all about that pre-planning though. You want to be during the fundraise, you want to be as fast as possible, as tight as possible to build FOMO and momentum so that you can create these made up deadlines that you with confidence and say, hey, we're making a decision in 2 weeks. If you want in, this is how it's going to go. And then it puts you way more in the driver's seat.